Hello friends, welcome to my channel Basics of Tax Accounting. It's a place where we cover different aspects of a tax accountant and whatever topics you come across as a tax professional. Before we start our today's presentation, please do subscribe to my channel if you like the content and would like to stay connected and linked to all the content that I'm posting on my channel. So our topic of the discussion today is the nexus for sales and use tax purposes. As a tax professional, a lot of you must have heard this term nexus, both in the sense of state taxation on the income, and also related to the sales and use tax, which is imposed by several states in the United States. So moving on to what is nexus and why is it needed. So nexus and sales tax, they go hand in hand. So any state needs a minimum connection between your business and the state in order to impose a sales tax on your business. So you can treat this, you can try to understand this also from a standpoint of a permanent establishment, which is an international tax concept. So in order for a country to impose a tax on your business, they need to make sure that you have some kind of connection with the country, which generally is defined as a permanent establishment. In the sales and use tax arena, that concept is known as nexus. So nexus is nothing but a simple connection or a minimum required connection between a business and a state, which can allow the state to impose the requirement of sales and use tax on your business. So moving on to how the nexus has evolved over the years and what has changed over the years when it comes to the nexus for sales and use tax purposes. So about 10 to 15 years ago, or maybe 20 years ago, the nexus was established mostly by the physical presence test, which means that if your business is physically present in a state in the form of a brick and mortar shop, or a storage facility, or a warehouse facility, or if you have an employee in that state, all of those were good enough to establish a physical presence nexus for sales and use tax purposes. So during the course of my presentation, do not confuse the nexus between the state income tax and state sales tax. So the nexus standards are different for state income tax and for state sales tax. And what has changed now is physical presence nexus is still there. So if you are physically present in a state in any of the form, then you have a sales tax nexus, which is like a no-brainer. But with the onset of online retailers and web shopping, some new kinds of nexus have been established, like economic nexus, affiliated nexus, click-through nexus, and cookie nexus. So we'll discuss each of these in our presentation today. So the nexus has evolved over the time to keep up with the changing environment in which the business is conducted. So a few years ago, those who were born or are like dinosaurs like me would know that we had to buy everything by walking into a store or a shop, whereas all the millennials now, they buy their stuff online. You just place an order on a website and whatever you have ordered gets delivered at your doorsteps. So in order to keep up with the times, the states have introduced newer rules and regulations to extend the sales and use tax arena to all the online retailers, so that they are not just restricted to a physical presence test. So if we go if we take a deeper dive into all kinds of nexuses, so physical presence nexus, as I said, it's a no-brainer. If you are physically present in a state, then you have a nexus with the state, and you are responsible for collecting and remitting sales tax on all your sales. Physical presence nexus is generally established if you have a shop in the state, if you have a warehouse, or if you have an employee in the state. Those were good enough to establish a nexus. Economic nexus is something which does not require a business to be physically present in the state. So this is the most recently evolved nexus, in the sense that in the recent ruling which was issued by the Supreme Court in the case of Wayfair versus South Dakota, the ruling came out in 2018, which expanded the sales and use tax nexus beyond physical presence. So what this means is states can now say that even if you are not physically present in our state, we can still impose sales and use tax on your business on the basis of the minimum economic activity that you conduct in a state. And the minimum economic activity or connection can be defined as a dollar threshold of the sales amount. It can be the number of transactions that you have entered into a state, and it can also be the number of customers that you have in the state. Coming to the number of transactions, each state may have its own definition of transaction. So when you make a sale, could be one transaction. If that customer returns the good, could be a transaction second, number two. So that can really add up pretty soon in modern times. Talking about the affiliated nexus, so the affiliated nexus, click-through nexus, and cookie nexus, they all were introduced by different states before the Wayfair ruling, and they are nothing but different forms of economic nexus which try to cover several businesses, to cover all those businesses to collect sales tax which are outside of physical presence test. So the affiliated nexus is established when there's an out-of-state seller who has an affiliate in the state, and that affiliate is selling a similar nature service or a similar brand of goods which is held by the out-of-state seller. So a simple example could be your holding company in the US may own a copyright to a certain product, whereas the affiliate of that holding company, which could be a direct subsidiary, an affiliate can also be another out-of-state seller who has significant control over the in-state seller in terms of any contractual liability or the number of or the amount of transactions that they get involved with. So the out-of-state seller may own a copyright or a brand or anything of that sort, and the in-state seller is making that sale within the state. So some states can impose sales tax on the out-of-state seller on the grounds that they have a sufficient nexus in their state based on the affiliation with the in-state seller. Moving on to click-through nexus. This again is a tool which was used by, which is still used by many states to cover an out-of-state online retailer. So what click-through nexus does is, if any online retailer exceeds a minimum economic nexus within a state, then even though they are not present in that state, they can be required, or they are required, to collect and remit sales tax. The last kind of nexus is the cookie nexus, which again predates the Wayfair ruling and was also a tool used by some states to include the online retailers for collecting sales and use taxes. So what cookie nexus does is, if a resident of a state accesses a out-of-state retailer's website and downloads their app on their computer, or downloads a cookie on their computer, then it creates a nexus for that online retailer. So some states consider these cookies as tangible property, which exists in their state and thereby gives them the right to collect sales and use tax from the out of state retailer. So, what does having a nexus mean for your business? So, if a nexus is established between your business and any state, then you have to be compliant for sales and use tax purposes, which means that you have to collect sales tax on all your sales, and then you have to remit that sales tax collected to the state by filing a sales tax return, which could be monthly, quarterly, or annual, depending on the state and depending on their rules. The second aspect would be an implementation of a system. It could be a ERP system or any software that can help you in calculating your sales tax when you are creating the invoice, and then thereafter creating the sales tax return, which you can file with the state. And the third aspect is the audit. Obviously, if you are filing a return of any kind with the state, they have the right to audit your books of accounts to make sure that you are collecting the appropriate taxes and are paying them to the state. And that ends our presentation for today. And I would like to mention that this presentation was strictly limited to Nexus. There are many more aspects of sales tax which are applicable in US, and I will try to cover those in upcoming presentations. And once again, if you like the content and if you think it is useful, please subscribe to my channel, spread the word. That means a lot to me. Thank you and have a nice day.